Welcome to today's Explainer, everyone. I am super excited to guide you through this because we're unpacking some truly fascinating market dynamics today. We are looking at the highly anticipated final June 2026 PVC market trend report, straight from Polymer Bazaar. Now, if you follow commodities or work anywhere in the downstream plastics industry, you know exactly how absolutely crucial these weekly pulses are for timing your purchases, right? So today, we're taking all that raw data and turning it into a clear, actionable story about exactly where the global PVC market is heading.
Okay, let's quickly hit our agenda. We'll start with the global PVC climate, tour the Western markets of the US and Europe, and then pivot to the Eastern markets of Turkey and China. After that, we'll take a deep dive into the Indian bazaar, analyze Indian supply and price revisions, and finally wrap up with a solid strategic purchase recommendation. Let's jump in.
Section 1. The Global PVC Climate. Think of these global pulse as our macroeconomic weather report. And spoiler alert, you're probably going to want to grab an umbrella. When we look across the US, Europe, Turkey, and China, the market mentality and price trends tell a surprisingly unified story. We're not seeing isolated regional blips here, it's a synchronized global hesitation. Buyers everywhere are stepping back, and prices, well, they're definitely reflecting that total lack of momentum. It is a really heavy market right now. Section 2. Western markets, the US and Europe. Now, what's really wild is that even in a global slowdown, regions react so differently. In the US bazaar, we're seeing absolute pessimism. Buyers fully expect the next round of export offers to drop even lower, so they're just holding their breath. But over in the European bazaar, the demand is undeniably low, sure, but there's ample supply. So it's less of a panic and more of a stagnant holding pattern. And that US pessimism? It is totally justified by a massive price drop. FAS Houston prices absolutely tanked. We're talking a severe downward revision of $55 per metric ton, bringing the price tumbling down to $690. When benchmark prices out of Houston take a hit of that magnitude, it sends shockwaves through the entire export market. Sellers are literally having to aggressively discount just to find any liquidity. Meanwhile, checking back in on Europe, it's a completely different pricing reality. Despite the rock-bottom demand we just talked about, European FDNWE prices, that's free-delivered Northwest Europe, maintained a remarkably stable front. They're holding flat at an even €1,000 per metric ton. That ample supply hasn't triggered the same aggressive price slashing we're seeing in the States, which tells us suppliers there are prioritizing price stability over clearing out inventory at a big discount. Section 3. Eastern markets. Turkey and China. Heading eastward, Turkey's bazaar is definitely feeling a chill. Buyers are showing practically zero interest, and honestly, it makes total sense. The market is getting flooded with cheaper import offers. When buyers see cheaper material continually arriving at their doorstep, they lose all urgency to buy today, and that just creates intense downward pressure. So the direct mathematical results of that pressure? Turkish CFR prices, cost and freight, took a $30 hit per metric ton. That lands the current price right at $870. The sheer gravity of those cheap imports successfully dragged the whole regional benchmark down with it. Right next door in China, the picture is pretty subdued too. The Chinese bazaar is defined right now by completely dull demand. Buyers are strictly purchasing on a need-to-have basis. Literally nobody is building inventory. They're operating hand-to-mouth and heavily favoring low-price materials just to protect their margins. This super defensive posture has anchored spot prices firmly around 4,700 yuan per metric ton. The momentum just isn't there to push things higher. Section 4. Deep dive into the Indian bazaar. So how are all these global dominoes, the US price crashes, the sluggish European demand, the cautious Asian buying, actually triggering local market shifts? Well, the local vibe in India is incredibly cautious. The buying pulse shows zero improvement. And here's the why behind that. Finished product sales are just stagnant. Look, if the downstream folks aren't selling their PVC pipes and fittings, they're sure not going to buy raw resin. Converters prefer to stay safely on the sidelines, waiting for a clear signal before spending their capital. And that signal, yeah, it's definitely not coming from the import markets, which are just echoing the global chill. The latest import offers for the benchmark PVC K67 grade, slated for July 2026 shipments, have been assessed even lower. Right now, they're sitting around $710 to $715 CIF India. With future overseas offers dropping like that, domestic buyers have absolutely zero incentive to rush into the market today. Section 5. Indian supply and price revisions.
Okay, so buyers aren't buying. What do suppliers do? They take action. In a massive market-moving decision effective June 25, 2026, Indian domestic producer RIL announced a sharp rate reduction of 4 rupees per kilogram. And get this, it wasn't isolated. This cut applied across all PVC grades. When a major domestic player slashes prices by 4 rupees a kilo, it's a big flashing sign that the market needs a serious jolt to get volume moving again. Suppliers are basically mounting a three-pronged counteroffensive here. First, they've got adequate overall supplies, so there's no shortage-driven panic buying happening. Second, as we just saw, they're actively revising ex-works prices downwards. And third, which is actually a brilliant tactic, they've rolled out a fresh price protection scheme. Think of this as an insurance policy for buyers. It guarantees that if prices drop even further after you purchase, the supplier makes up the difference. It's a really powerful tool to coax those terrified buyers off the sidelines. Section 6. Strategic Purchase Recommendation. All right, let's connect all these dots. We've toured the globe, we've looked at the hard data, now let's translate all of this into a definitive purchasing strategy for your business. Here's the logical flow. Step 1, we are tracking falling benchmark offers globally, from Houston all the way to Turkey. Step 2, there's a widespread expectation that the next round of export quotes will drop even further. And step 3, because of all that immense external pressure, there is a very high probability of another round of domestic ex-works price cuts in India. The downward momentum is completely in the driver's seat right now. Which brings us to the ultimate bottom line from the report. Because of this continuous, layered downward pressure, Polymer Bazaar's recommendation is perfectly summed up in this quote. In view of this, we suggest need buying. Simply put, do not try to catch a falling knife. Now is not the time to build inventory. Strictly limit your procurement to what you absolutely need to keep your lines running. We've covered a lot of ground today, but if you want to dig into the specific corporate market trends and the really gritty weekly financial analysis, you definitely need to grab the full PDF report. You can find it right on their website at www.polymerbazaar.com/futuretrends/PVC, or honestly, just shoot them a message on WhatsApp at +91 93754 24365 to get the latest look. I'm going to leave you with this final thought to chew on as you plan your week. With global fronts continuing to cool down and major domestic producers actively slashing their prices just to find demand, are we finally nearing the absolute bottom of this PVC price cycle? Or should buyers brace themselves for yet another downward revision just over the horizon? Thank you so much for joining me for this explainer. Stay focused, stay informed, and I'll catch you next time.